So let me introduce the guys, right? So Damian, I know for a while. Damian is the founder and CEO of Bitstamp. It's one of the first and largest regulated exchanges. And Shawn O'Connor, we were talking so much about Skynet today. And so we have, I don't think it's any relation to Sarah O'Connor, but Shawn is actually, a pretty big user of exchanges. So he runs funds. He's also been a part of an exchange. So I think it's going to be a very fun and, good conversation. So first, I'll ask Damian. Damian. So when you set up Bitstamp, when you were growing it, in the very early days of this whole crypto, emergence of this crypto anarchy, what were the most memorable, the most sort of fun and exciting? Like, just tell us some war stories about how you were setting up the company and how you took it to where it is.
So the first thing is that I'm co-founder of CEO. I'm not co-founder of Bitstamp. I'm not the CEO of the company, as you said. But I used to be a CTO, but then I retired. So now I am on the board of directors, and I own 1/3 of the company. So don't ask me too specific questions about the operations of the company. So the question about the fun times.
Yes.
So we started in 2011. Bitstamp was founded in August 2011. I got introduced to Bitcoin like 6 months before that. So the price was $2. I bought some, started mining, met my future business partner because I bought some computer hardware from him. He owned a computer store in my hometown. So after that, we started hanging out. We drank some beers. We talked about Bitcoin, and we looked at Mt. Gox at that time. And we just said, these guys are making like $10,000 each day. So what do we do to get the same amount of money for ourselves? So we just tried to do the same thing as Mt. Gox was doing, but in Europe. So we did that. We got a bank account, opened an exchange, and it just took off. I mean, the first 2 years were pretty low profile. We didn't get much traction. We didn't get much customers, but after that, it just took off like exponentially.
But tell me, like, something maybe, like some, because you try to do the regulated exchange. So maybe let's think about this. The next question, like, you obviously you had some run-ins with the regulators, maybe some issues like, with this compliance, AML. So, next question will be like, think about while I ask a question to Shawn, how did you find this interaction with the government and, these type of things? What did you find there? And Shawn, to you, I'll turn, because I'm an ex-trader myself, and, we always have war stories, and you've been also trading these currencies for a long time. So, can you tell us like some also sort of fun, memorable moments where you just saw these crazy like price moves or exchange wouldn't give you your Bitcoins back or something, like tell us your, interesting stories from that side.
Well, I think that anybody who's traded on any of the, what we call exchanges in this sort of crypto space has experienced some of the challenges of, say, withdrawing your funds or what happens when exchange goes down, or what happens when exchange disappears or shows up in the news in a bad way or whatever. And so, I think that that's definitely one of the problems of trading in the space. I mean, it's sort of it's not that it's unregulated, but it's the regulation is not clear. A lot of the particular venues or the exchanges you don't know you don't even know what country some of these are in. I mean, I don't think it was ever clear to me what country BTCE was in. Yeah. So, I think that, it's also challenging from being, inside an exchange. It's hard to figure out what regulator to deal with, when you're trying to run an exchange. It's very hard to know, do you talk to CFTC? Do you talk to the SEC? In the case of Bitstamp, do you talk to, do you get an e-money license or whatever? These are all hard decisions kind of on both sides.
So maybe you can tell us more about your interaction with the regulators. How was that?
So at first, when we founded Bitstamp, there was no thought about regulation or anything. We just opened the company and went to the bank and opened a bank account. So when the bank asked us what we're going to do, we just said software development or something like that. I don't even remember, but it was like a computer-related company. But after 1 year or 2 years, the money in our bank account became, the number in our bank account became pretty large. So the bank started asking questions, and we had to answer them. So when this happened, we started thinking about relocating or getting some kind of a license. So we found out, we got approached by some lawyers from Luxembourg, and they suggested us the kind of license that we could get in Luxembourg that could work for our kind of business. And basically we decided to go forward with that. And we got licensed in Luxembourg, and that's it. That's my view of the regulators. But it's very cumbersome. It takes a lot of time. People often ask me why does Bitstamp only trade, I don't know, Bitcoin, Ethereum, and Litecoin and Ripple? Why not ERC20 tokens? It's because it takes like 6 months to even get like a license extension, and then it takes maybe even more time for our partners that process deposits, withdrawals to implement that, and it's not a quick process.
Yeah, and I think that's a good example where the exchanges that choose the path of sort of a heavier regulation are then at a disadvantage to the ones that are sort of not subject to that sort of 6-month approval process to add a new listing or whatever. But didn't you work at the Moscow exchange? Maybe you should tell us some more stories, some real exchanges, right?
Yeah, the Moscow exchange and the big exchanges. To me, what I found is like some of the most, and this is what happened like to the Bitcoin futures. I'll just very quickly tell. Like you can never tell when a product takes off. Like sometimes you build, in crypto right now, it's a very exciting sort of opportunity. Everybody gets into it. But for example, we were trying to launch some products, and it wasn't clear why it's not taking off. You're spending money on market makers or marketing. And I asked the CEO of Deutsche Börse. I asked him, like, how do you guys deal with it? How do you guys launch new products? And he said, Roman, I'll tell you one story. Like we had DAX futures that were very popular, and then we launched S&P Eurostox. They launched Eurostox futures, and they spent 3 years and tens of millions of dollars trying to launch that future, and it still didn't take off. And it was like basically DAX was trading very high, and Eurostox was just at the bottom. And they scheduled a board meeting to cancel Eurostox future because to stop spending money on it. And it says suddenly months before the meeting it started to take off like exponentially. And he said, I asked all of my executives, what happened, what did you do? And they all gave different answers. And he says, in the end, we just don't know. So it's a little bit like when you develop new products, it's always like a hit and miss, and sometimes products become popular and sometimes not. Hard to tell. But and I see actually, and this is what we were talking about, the emergence, like the joining of traditional technologies, like central counterparties, like swaps, coming to this world of cryptocurrencies. And this is why I actually wanted to shut the question back to you, Shawn. Like, as a user, like where do you see this actual trading infrastructure evolving over the next couple of years? Do you see like consolidation of exchanges? Do you see development of these central counterparties, or do you see like everybody and their grandma running a Bitcoin exchange in their backyard?
Well, I think that right now we see a proliferation of exchanges throughout the world as the traditional fiat exchange, or the exchanges where people are able to buy crypto for hryvnia or rubles or whatever. These exchanges are principally of interest to people just trying to come into the market, and these kind of on-ramps into crypto. I think that we're going to see them proliferate as countries open up and people feel more comfortable and can get banking, and it becomes more familiar to the traditional system. Now, I think that in the case of the institutional clients or the traders on Deutsche Börse or Moscow Exchange, those guys are going to start adopting more of the approach from the crypto side, because the crypto side delivers certain advantages that serves a need that traditionally is much more expensive. If we're looking at how the traditional stack of finance works, in each country in Europe, there's a central depository and there's a custodians, and then there's an exchange, there's banks, there's all these steps that are there to protect different different parts of the system. The custody shouldn't be the same as the brokerage, it shouldn't be the same as the exchange, and in the crypto world, all that sort of still hasn't it's still not separated in the way it is in the traditional finance world, partly because the promise is that cryptography and consensus algorithms and blockchain and so on are going to give us the opportunity to improve the way the custody works and improve the way the depository would work, or make it not necessary. And so, if Bitcoin is in a sense, arguably self-custodying, then maybe we don't need a custodian to hold our Bitcoin, because the Bitcoin network holds itself. Now, that's not always the case for everything, but that gives us sort of the flavor of how we might see custody or depositories or brokerages and exchanges in the traditional sense change when it becomes possible to sort of make them implement most of that technologically. So.
Damian, so I'll follow up the question to you, because you mentioned, I don't know if you want to mention your future plans here. You as also a builder of this infrastructure, where do you see it's evolving over the next couple of years, and what role do you want to play?
Well, when we started, there were no companies that would offer that could act as a custodians or anything related to that. So when we built crypto exchange, we had to be all of this. So we had to be custodians, brokers, exchange business, everything in one place. So maybe that's why the economy is used to that, and maybe that's why this is gonna stay. But for the future, there is a lot of talk about decentralized exchanges. But when we're talking about decentralized exchanges, usually we just mean Ethereum token, smart contracts that exchange tokens between themselves. What about exchanging other cryptocurrencies? That's a little harder to do. What about exchanging other cryptocurrencies for fiat currencies? How do you decentralize that? I mean, it's not that easy. So I don't see decentralized exchanges taking over anytime soon. And they are also pretty slow. I mean, you have to wait for confirmation, so it's not useful for daily traders.
So I've been following the decentralized exchange space pretty closely, because I think it's interesting, and it would be nice to see, especially the custody decentralized. I think that it's a challenge to the large exchanges like a Bitstamp or Kraken or Bitfinex to have all that custody. I mean, that is a big risk, and that risk is the hope is that eventually that risk can be decentralized or distributed, and just let people hold their own coins, and then the exchanges can just perform a matching function. And that doesn't need to be particularly fast, because the funding operations on most of these exchanges aren't fast anyways. And so if it takes you a day or it takes you a week to wire money in or out, it's not that big a deal that maybe it's slow to have the custody be done on the blockchain. But there are different models, and there's some people trying to do the order book in a decentralized way, or not have an order book and just have a matching engine that's on the blockchain or whatever. And I think those are going to have some challenges from the point of view of there's a it's easy to imagine how it might have some sort of front running problem if everyone can see the orders coming in, or they might have some issues with incentive structures where maybe the operator has some decision it can make, or there's a lot of challenges in trying to make the entire current exchange system decentralized. But I think there's definitely a lot of promise in decentralizing custody immediately. So I hope to see that in the next year or two.
I hope also we'll see decentralized, like central counterparty, people acting more as central counterparties and guaranteeing transactions and doing delayed settlement transactions. That's where I think the industry is going to evolve. But anyway, guys, we have these, it's a very rare opportunity to have both of these speakers here. So I hope you saved up some questions for last. So I'm going to open it up for questions to the guys. So I know it's late, but everybody wants to go to dinner. All right, Gabriel.
Thank you, guys. Thanks for the presentation. Do you think there is going to be a major concern for exchanges, the deposit and the holding of the actual cryptocurrencies? I know that many users are using exchanges as a deposit or a vault, and the exchanges are incurring a huge costs and liabilities to secure those cryptocurrencies, but not profiting from that. So should we expect exchanges to start charging users for their vaults or disincentivizing that? Yeah.
I hope so, because I'm owner of one, but I actually of two. But it's very hard to implement a fee structure for something that others are not charging. So if you start doing that, you risk of your clients just running away to the exchanges that are not charging for that. I don't see in the near future. I don't see any exchange to start charging for cryptocurrency deposits. The other problem that exchanges will have is fiat deposits, because in some countries there are negative interest rates, and exchanges hold fiat money in bank accounts that will charge them negative interest rates, and that's a lot of money. So that's the other question.
Yeah, I think that the negative interest rate thing is definitely a problem that all the exchanges faced, and to some extent, the negative interest rate issue, you could argue, is partly the reason why things like Bitcoin are so interesting, because it's very hard for people to explain how negative interest rates exist or persist and are in any way rational, and so that one could say that maybe motivated the sort of development of this whole field. I think that the custody issue is something where we're going to see people start charging for custody, maybe not just the exchanges, but I think there's some efforts from maybe Ledger and some other wallet, like hardware wallets are going to charge. They're going to see like services that charge, like BitGo charges some amount for custody and so on. And so I think that we'll see a broadening of the field of custodial services. But what's different in this sector versus the traditional sector is that the users, in a sense, have an easier option to switch and choose, whereas in the traditional finance sector, the custodians are relatively baked in by the regulators and the particular jurisdiction that you're in. And so if you're in Luxembourg, you have Lux CDS as your custodian for a lot of your operations, and that's it. And that's owned by Deutsche Börse, and that's your choice. And in America, you have basically DTCC or whatever the equivalent is, like for whatever operation you're doing. But there's a very small amount of actual custodians per jurisdiction. Whereas if we have Ledger competing with BitGo, competing with Coinbase or whoever, that's a lot more choice for the user, and I think ultimately could end up with a lot more improvements sooner than we would see in the traditional sector.
All right, last question. Two last questions.
Who was the first? Okay.
Yeah, the guy that had, but don't think asked any questions yet.
Hi. It's quite a new news, this one. But I'd like to know what you think about the approach of Robinhood Exchange. So basically, an exchange with zero commission for the people that are trading on the exchange. It's quite a relevant news right now, and the approach they are doing, it's a long-term battle with all the other exchanges. So, like, what's your point of view on this?
So any exchange or any broker or any custodian has different ways to make money. In the traditional sector, if you look at where Deutsche Börse makes its money, some amount of money will be made from sort of collateral lending facilities. Some amount of money will be made from exchange fees. Some amount of money will be made from, downstream, the brokers will be charging fees and so on. And what you see when like the Chinese exchanges or when like a Robinhood sort of exchange or broker, whatever it is charging zero fees. What that means is that they're making their money somewhere else. So maybe what Robinhood does is they consider the fees to be a way for them to acquire users because the fees are attractive, but then they charge people for margin lending, or they charge people for some other, wealth planning service or some other upsell or cross-sell service that they offer the user, and then that's, the zero fee trading basically is a way for them to get customers for something else, and that's just a business decision, and I don't think it's, where most, well, I'm not going to say most people are rational, but whether they succeed at that or how successful that is just a sort of business strategy and market competition issue. And I don't know that just charging zero fees is all that world changing.
Okay, so my name is Serge. I have a really quick question. Right now, the market is 75% retail and 25% institutional trades. When do you guys think it will change, and what conditions should be to change that? For institutions to come to the market and to start, like Goldman and guys like that, to start execute their strategies on the cryptocurrency exchanges. Thanks.
How do you know that numbers?
It's just, I don't know, it's some article about that 70% right now is retail. It's
Okay,
not
yeah, but
wholesale.
it's mostly retail, I guess. It's true. So the number one requirement for any institutional investor to enter the cryptocurrency market is regulated exchange. They cannot do trades on unregulated exchanges. So more regulated exchanges, more regulated environment, more, I don't know, laws that support that will bring more institutional clients into that ecosystem.
I guess, again, I had the same question about the numbers, but I think that traditionally the sort of, it's difficult for regulated institutions to figure out the custody issues, like where's this, who are the regulated custodians or depositories or administrators or whatever that are willing to deal with the underlying deliverable cryptocurrency, right? And that's very hard to find. And even if you could find one for Bitcoin or Ethereum, maybe you're not going to find one for, Tron or whatever it is, right? And so the problem partly is just the structure of the institutional trader is such that they require a lot more apparatus than is available in the space right now. On the flip side, I'll say that I see a lot of institutions coming in, and I think most of the exchanges, including Bitstamp and everybody else, Kraken, I mean, there are a lot of institutional traders, and I think that in the market structure, what you'll see is that on the lit markets, maybe that is dominated by retail or professional traders, but not necessarily institutional professionals, and that many of the institutional traders are maybe participating more actively in the large OTC markets that are not on the lit market, but just sort of on the side market.
But they don't influence the price this way if they participate in OTC.
Well, I mean, they indirectly influence the price. I mean, they're not posting the price on the lit market, but their effect of a large order on the OTC markets does show up on the lit markets as people try to fill it and so on.
What do you think about CME CBOE futures? Is it somehow will influence?
I think that those guys have an opportunity to bridge some of the institutional, flows to the sort of crypto flow. But the problem is that it would be nice to see maybe deliverable instruments and ones where people with actual, like, their bases covered could actually, trade with the full acknowledgement that they're covered fully by holding the Bitcoin, as opposed to having to sell the Bitcoin to trade a future that that exposes them to Bitcoin or something. So, I mean, I think that there's some challenges ahead, but they're trying to get products out that, they can do today in the sort of regulatory environment they're in. And I think that they're trying to work through those issues. And in the coming years, we'll see, better and better products evolve and more deliverable products, hopefully, or something that, at least doesn't have this kind of like collateral distortion.
Okay, guys, Shawn and Damian, you guys going to be at the after party today? Yeah, Shawn? Yes? Okay, so you guys can save the questions for the after party, but I think these are amazing, absolutely amazing guests, and I'm really glad that you came to our conference. So thank you very much, guys.